We're going to take a look now at an adjustment which involves paying a director some sales commission. So it's only appeared 3 times and it can be answered poorly. So let's take a look at it and see what it's all about. So what is commission, first of all? So commission is an additional compensation that's earned based on job performance, such as when they hit sales goals. So the more sales that somebody has, the more commission that they will be paid. So it's a motivation for people to sell as much as they can. So it's based on a percentage of sales. Therefore, that means it's going to be a selling and distribution expense in the trading profit and loss account. We're often told in exams, or the 3 times that it's appeared, the managing director should be paid a bonus commission of, and then whatever it is. So that definitely tells us it hasn't happened yet. So should be, that's future tense, okay? Therefore, it's also going to appear in the balance sheet under creditors, amounts falling due within 1 year. So looking at the 2021 question 1B here, the manufacturing account, the adjustment was number 7 and part 4, and it said the sales director should be paid a bonus commission of 2% on sales greater than €1 million, increasing to 3% on any sales above 1.5 million. Now you'll see here I have a couple of other things highlighted yellow. I've got sales highlighted yellow, and then I've got selling expenses. So in manufacturing accounts, they tell me what the selling expenses is there. So the sales commission will be added to that selling expenses figure of 87,000. But we have to take note of this note 3. You'll see that in our closing stock adjustments, it's all about sale or return. So finished goods were sent to a customer on the 31st of the 12th, 2020 on a sale or return basis. So these goods were recorded in the books as a credit sale of €16,000, which is a markup on cost of 25%. So the debtor was charged 16,000. Okay, so the bookkeeper recorded it as a credit sale to the debtor of 16,000. So when we see the sale or return being entered in the books, that's a mistake. We have to unwind that. So we previously minused 16,000 from sales when we were doing adjustment number 3. So you'll see here 16,000 from sales in adjustment number 3. So the sales is 1,734,000. Okay, so knowing that the sales are 1,734,000, let's read this again. The sales director should be paid a bonus commission of 2% on sales greater than €1 million, increasing to 3% on any sales above 1.5 million. So from 1 million up to 1.5 million, they're going to get 2%. And then from 1.5 million up to 1,734,000, they're going to get 3%. So this is how it's going to be. So the selling commission is going to be 17,020 there. So altogether it's 104,020. So let's see how that looked. The 500,000 by 2% is 10,000, and then add the 234,000 above 1.5 million, and that is 7,020. So altogether there, €17,020 is added to the selling expenses, 87,000. Now, as I said earlier, it should be paid. That means they haven't been paid yet. So we'll put them in the creditors, amounts falling due within 1 year in the balance sheet. So the whole 17,020 goes in there. So that's the 2021 question 1 part B, sales commission 1 done. So the 2019 one, it was note 9 and part 3 then. So the managing director should be paid a bonus commission of 5% on all sales in excess of 1.2 million. So the sales figure here, 1.59 million. Okay, and the managing director should be paid a bonus commission of 5% in sales in excess of this. But as you see here, when we highlighted number 4, it was discovered that goods had been sent to a customer on a sale or return basis. These goods have been entered in the books as a credit sale of 7.5, which is a markup on cost of 20%. So our sales look like this. So the 1.59 million minus the 7,500 that was incorrectly treated as sales leaves 0.582,500. So the managing director should be paid a bonus commission of 5% on all sales in excess of 1.2 million. So we've got 382,500 then in excess of 1.2 million. And it'll be a selling and distribution expense. And so the sales commission is 19,125 because it is the 382,500 by 5%. Now they should be paid, they haven't been paid yet. So we're going to have sales commission due 19,125 there in creditors amounts falling due within 1 year. Then our last one, we now have it in 2015, so another company account. So note 8, part 4. So the managing director should be paid a bonus commission of 3% on all sales in excess of €900,000 and a further 5% in excess of all sales above 1.2 million. Okay, so our sales are up here. None of our other adjustments affected our sales figure of 1.495 million. So our sales are 1495 and we will calculate the sales commission as follows. So altogether it's 32,600. So anything in excess of 900,000, which is 595, we get 3% commission on it, which is 17,850, and then we get another 5% in anything in excess of 1.2. So you've got 295 above 1.2 million, and that is multiplied by 5%, and that is 14,750. Total them up, we got 32,600 sales commission, and then we haven't paid that yet. It'll be sales commission due here in creditors minus 1 year, 32,600 there. So that is the 3 commission payments to directors that has appeared in the exams to date.